Hey everyone, this is Dan from InsideBars.com, and this educational video we're going to be breaking down the basics of what is an inside bar. And the very simple answer is that an inside bar is a pattern that you will find forming on every single time frame, on every stock commodity, anything that you can possibly trade. The human psychology and emotional aspect of trading makes this pattern form time and time again. And the benefit of recognizing this pattern is being able to act on it, see clear setups, and have more confidence in your trades. So that's what we do at InsideBars.com. We send out automatic trade signals when these patterns are forming to tell us, heads up, there is a clear pattern forming and a break is going to be occurring. And we're always going to be adding different features to this website. So looking forward to the future of InsideBars.com and all the different tools that we can utilize as traders. Hey everyone, so updating the list of stocks we look at here, removing some names that have gotten bullish, CMG among them. We were certainly covering CMG from a bullish perspective for the last couple of months, but just want to clean this up, and we're going to be looking at stocks here that have general overall downtrends. That doesn't mean every single trade is going to be bearish. We can play both directions, but we're just going to have the general mindset of the downside of the long-term trend. So it is easier to trade with the trend and be scouting for bearish positions on bounce attempts and then be looking for further downside. But again, that doesn't mean that we cannot play oversold bounces. If there's clear setups, that's absolutely what we're going to do. So we're looking at Twitter, GoPro, X, and CHK here now on these lists. And we're starting with Twitter, and obviously it's a raging bull on the daily time frame. The bulls are in full control, so we have to keep that perspective in mind as well. But what we're looking at right now is the low of consolidation of 1816. We had nice follow through to start Friday, looking to confirm the bull flag, and we did with higher highs, but clearly profit taking by the end of the day and the end of the week here. So we're watching the range right now of 1816 support. If that breaks, we're looking at 18, and then the 200-day moving average of 1755. In terms of resistance, we're looking at 1905 as a key level. And why we're going to keep Twitter on this list is, although we broke this lower high pattern on the weekly time frame, what stands out to me is a more long-term perspective. First, let's cover the weekly, and then I want to look at the monthly. So the weekly here, we have a bearish reversal doji after 3 big bull weeks. So we will be looking for a potential red week to confirm this bearish reversal candlestick, and what will indicate that is a break of that 1816 level. As soon as you break the low of a bearish reversal candlestick, the odds increase significantly of confirming that candlestick. And if we do consolidate, we will look to form a higher low and keep the bulls in control in the short term. It was a very low volume week compared to the bull volume, and I don't think the bulls are done here. They might be done in the short term while we consolidate, but overall, this is the pattern that I'm looking for to play out on the monthly time frame. So here's the history of Twitter on the monthly, and we have what we have is an equilibrium pattern, and multiple ones of them, multiple equilibrium patterns. So what we have is our low, the high, all-time high, higher low, lower high, higher low, lower high. And again, you see these patterns everywhere. We play them on the 5-minute time frame. It's inside bars and equilibrium patterns, and we had a clear bear break. So following the equilibrium pattern bear break, as soon as we broke 34.62, that's your bear break, we had an all-out dump, and it was a very significant dump with a lot of pullback. Now we have hit a low, and we're forming another equilibrium pattern, in my opinion, and that's coming after a big, strong market direction move. So we set our all-time low. We had a bounce high. Our high is 25.25. We pulled back and formed a higher low. I do anticipate we are going to form a lower high compared to 25.25. So I will be scouting for indications on the weekly time frame that the top is in of this move. Now, obviously, we're at 1861. We could see literally another 10-15% to the upside before we set a lower high. So that's why I'm not limiting the short-term action of these bulls. But we're looking for another lower high to happen. We're going to pull back and watch a tightening range continue to play out. So I do like this nice monthly chart. It's got some really clear levels, and I do believe after this large volatility that we are going to see another equilibrium pattern. We could break it bullish and completely reverse this trend. We could break it bearish and see no all-time lows. But I do believe it's going to be playing out for the rest of 2017. GoPro on the daily time frame, been highlighting the importance of this middle Bollinger Band on the daily, and that's because the first bounce attempt rejected from it. Here's another bounce attempt rejecting from it, and we closed at the low of the day. So our new resistance is this middle Bollinger Band. It's at 867, and our support is down at 853, 837, 828, and we have a bunch of supports to be watching over the last few days. but it's going to be up to the bulls to regain this middle Bollinger Band on the daily as support to try and turn around the short term. On the weekly time frame for GoPro, we can see as long as this middle Bollinger Band on the weekly is resistance of 887 and dropping, the bears remain in control of this long-term trend. So it is an inside bar on the weekly time frame here as well. We'll be watching for a break of either 828 for the bears or 869 for the bulls this coming week, and it's a bit of an equilibrium pattern here just the past couple weeks where we have our dump, our high of the bounce, low, lower high, higher low, and we did get a little higher high here, but again, that middle Bollinger Band is rejecting the price, so we'll be watching that weekly inside bar this coming week as to which direction the short-term momentum is heading. It's still bearish for me as long as that middle Bollinger Band is resistant. If that can turn into support, we may shift. We'll be covering it each day. X has been an all-out bear. This is a steal name, and it has absolutely dumped. We've been oversold now for 3 weeks, and this is a perfect example where people using technical analysis, the question that bulls are saying is, how much lower can it go? We're so oversold. We have to bounce. Well, no, we don't. We can see really weak bounces, really short-term bounces, and then see continuation to the downside, which is exactly what we've been seeing for the past 3 weeks. All-out gap down dump, weak bounce, lower lows, lower highs, lower lows. We have not closed over the 4-period exponential moving average resistance since the gap down. That's signal number 1 for an oversold bounce to play out. But as of right now, we just hit a new lower low today on Friday, and we will be watching for a short-term bounce, and not saying we're not going to play it bullish because there will be a short-term bull opportunity, but on the bounce, we're going to be scouting another bearish entry opportunity once the bulls tire themselves out because this trend has shifted. We were in a very long-term uptrend for the past couple months, or past couple years, I should say, and we broke the higher low pattern. As soon as 30.59 broke, that shifts momentum. So 30.59 breaks, and then we see it was really a mini head and shoulders pattern. The right shoulder didn't really develop, but we had a low at 30.59 and a low at 30.66. And as soon as those levels broke, look what has happened in the past 5 months. It's just been a straight shot to the downside from pretty much a 33% loss in 5 weeks once that little double low was lost. So the bears are in complete control of this trend. We are looking for short-term bounces, but we've got weekly exponential resistance, or I should say weekly exponential resistance and lower Bollinger Band resistance. We closed at the low of the week. Support is the 100-week moving average of 1975. And in terms of price levels that I'm looking at for support, I'm looking down at 1989 and then down to 1694. So again, I wouldn't really be looking for a long-term bearish entry at this point. I would be looking for day trades perhaps, but we're so oversold at this point that I don't like initiating bearish positions with the RSI that low. So I would wait for a bounce for the bulls to tire themselves out, cool off the RSI, and then look for another bearish entry. CHK, I like CHK here because we have a clear pattern forming on the weekly. So here on the daily time frame, we have a higher low pattern, 488, 495, $5. So there's our higher lows. And resistance is this 100-week or the 100-day moving average. Like we got 3 rejections from the last top, and it's now dropping down. It's going to be around $6 to start this next week. So the bulls have some short-term momentum. This is healthy consolidation on the daily time frame. We see a big bull break. We see decreasing bear volume on the consolidation, looking to establish a new higher low. So our resistance right now is 583, and then the 100-day moving average resistance will be the next level we look at. The upper Bollinger Band is resistance as well. We'll be watching that level. But what I like here on the weekly time frame is a very clear pattern. We have the 100-week resistance continuously rejecting the price. We have 1, 2, 3, 4 rejections every bounce attempt from that level. That's at 603 as well, so that's going to be lining up with the daily 100-day moving average at the next couple weeks. But we also have this low, and we're building a base of support at $5 psychological. You put your line at 5 psychological, you can see we've bounced off of that 4 times in the past couple of months. So what we're going to see is a tightening range here, essentially a descending triangle pattern with our horizontal base of support at $5 and a lower high tightening range. So we are likely to test this 100-week moving average resistance again in the short term. If we can get over it, we're looking back up at 659. So I'm going to leave the door open here on CHK and say the bulls could turn things around and regain a trend here. And we're going to have to see the 100-week moving average become support and a break of 659 for that to happen. Or we see a break of $5 support down here and another dump to the downside. Those are the 2 scenarios. Let's look at the longer-term time frame real quick on the monthly and see what kind of setup we've got going. And we can see we're in a long-term downtrend. Seeing a bounce try and play out, this might be the top of that bounce. We were all the way down at 150 back in February 2016, so keep that in mind. We are currently well above that level, so you look at this low capped stock and you say $5, how much lower can we go? Well, less than or about a year ago, just over a year ago, we were down at 150. So we'll be watching this weekly pattern very closely. I appreciate you watching, and wow, that's a long video. Thanks for bearing with me.